Yo, what's good, everyone? My name is Bastian, for all of you who do not know me, and I'm happy and blessed to be here today. Man, what an incredible week so far. So, as you guys know, we've been, following DXY down into this weekly imbalance here for a really long time. We are trading below all these equal lows here. So you guys know what we like to look for below the lows. Of course, it's some accumulation, right? So I just want to make this video because I know that lately DXY has been ranging. And so when price ranges, personally, I have a strategy and approach to ranging days. And so I'm going to share that strategy with you guys today. So pay attention and we'll break down the two trades that I participated on today. Okay, so because we are in a previous area of accumulation, looking for, of course, some more accumulation off of this candle here. Okay, as you guys can see, we came back into that. And so here on the daily, the reaction out of that candle and daily insufficiency wasn't really the one I was expecting, right? I was expecting something a little bit stronger to the upside. Honestly, I'm expecting this price action to explode to the upside, actually. So one thing I want to bring you guys' attention is CPI. So we have CPI coming up tomorrow at 8:30 Eastern time. Okay, CPI is an important news event, and it is our inflation's reporting for the United States. Right now, during January 2023, January 11, 2023, we are in a recession here in the United States. And so these news have a higher impact than we usually do. So now, here's what we're looking at, okay? Because we have some really high volatile news tomorrow, price action has been ranging, okay? It is my belief that news is just an excuse to move price action in a predetermined direction. Okay, I believe that everything's already predetermined. Nothing's a coincidence when it comes to trading in the markets and the financial in this financial industry. I believe most things are manipulated. I believe the algorithm already intends to go up, and whatever news that they give us tomorrow was already predetermined from a master scheduling from way up above from us, right? And not to go too far down the rabbit hole, but yeah, so everything to me is controlled. So news is just an excuse to move price action. So price action will actually tell you a lot more before news hit. And so we're expecting okay, news to hit us in a bearish, okay, in a bearish condition. And what does that mean for the dollar? Okay, so not necessarily would the dollar go bearish or more bearish than it already is. It is if CPI or consumer price index, okay, if consumer price index comes out and reports negatively, meaning that inflation is indeed going down, the dollar will go up. Okay, the dollar will go up. And so we're in a previous area of accumulation, so that aligns to me. So let's say we were in a previous area of distribution, more up here or more up here into this weekly, then I'd be looking for some shorts, and I'd be anticipating CPI reportings to report some greater expectations, meaning that inflation is only getting worse. Okay, and so for the past 2 months, we've had some reductions on inflation, meaning that inflation is indeed slowing down. For the past 2 months, we've had some negative reports, pushing price action to the upside slightly on some occasions, and now we're expecting some negative reportings one more time, right? That it sounds like the Feds are going to slow down inflation, and the dollar will go bullish from here forth. Okay, who knows how long it's going to go bullish for? I don't know. I can't time the market. but I'm just sharing this information with you guys. And so when there's high volatile news like that, I'm getting to my point. Sorry, it took me a while. When there's high volatile news like that, you're going to notice that the day or two prior are going to be like this. Okay, they're going to be ranging between a certain price. And so here in the 4 hour, of course, we're still bearish, and you guys can see I have an alert set right there because I want to see what happens above these equal highs. I want to see if we get back up here and sell down into this area. Maybe CPI does something like this. We report, you know, and then push back down into that area. Or we can do something like this where we come down and then go for the highs. So there's a lot of speculations as to what could happen. For now, what I want you guys to do is when there's a ranging price action, I want you guys to mark out your range. Okay, so my range personally is not necessarily done by structure, but by time. Okay, previous daily highs and previous daily lows. That's what determines my range when it comes to consolidating price action. All right, so between the previous daily high here and previous daily low here, you can see that price action has just been ranging in that area within that zone. And so what we'll anticipate is either distribution above the highs or accumulation below the lows. Either way, we're in a very interesting area. And when price action consolidates like this, okay, when I go to the indices, and we're going to move over to NASDAQ, and we're going to cover a little bit of GU actually before we go into NAS. Okay, when price action ranges this way, okay, all I do personally before the day started yesterday, when I saw that this price was ranging, I go and I look for previous areas of accumulation, right? Because DXY, our belief is that DXY will continue pushing down, then previous areas of accumulation makes sense. Okay, so my eyes today went to this insufficiency here on the daily. Okay, so for some potential accumulations to continue looking for highs, but I'm not going to shoot, even though I know that is my highly probable area, because price action has been ranging for the past 2 days, or because price action is ranging, building up liquidity for CPI, right? News is the excuse, so therefore they're going to build up opinions over the previous 2 days, 2-3 days. And so I'm going to mark out the high and the lows. Okay, so I'm going to be looking for a previous daily high and of course previous daily low. That was my range. Okay, and as you guys can see, the previous daily low got hit. Okay, here on the 4 hour, right here on the 4 hour, you can see a little bit more clear around the previous daily low. We also have this insufficiency here. Boom. Okay, so confluence there's multiple things lining up telling us, hey, this is a really good area. So when we were here this morning, actually, when I was streaming for Abundant Capital this morning, I was looking for some accumulations inside this imbalance, right? Because all of this liquidity that's resting up above right here, right? You guys see all those equal highs. Okay, that trend line's gonna get smacked. The trend is not your friend. All right, sorry for anybody that thinks otherwise. Okay, here on the 1 hour, we did get a nice break, but before on the 1 hour, we got that break. Here on the 15-minute, we came down here, we swept that previous daily high, and what do I always tell you guys to look for? Okay, look for imbalances after a break of structure, right? The imbalance after a break indicates that smart money is in behind that move. So as you guys can see here, there's this imbalance here. Okay, I'm gonna zoom in a little bit more so you guys can see. Okay, we got a nice insufficiency in here that we create this higher high. Okay, and then we come down into this level of insufficiency, and you guys can see this order block opening right there. 1 second, sorry, I pressed the wrong one. Okay, so there you guys have it, right? And then to implicate one more thing, we're going to just implicate our internal and external liquidity, 50% and below, of course. Drop it down one time frame. You guys can see this structure right here is another level of confirmation. Now, I want you guys to see something. Okay, we have one previous daily low, level of support. 2, we have a 4-hour imbalance, another level of support. Price action accumulates, breaks to the upside. Okay, breaks to the upside on the 15-minute, creating an imbalance. That insufficiency is a level of support. This internal liquidity is a level of support. Plus this 15-minute order block open is a level of support. Okay, so you have previous daily high, 4-hour imbalance, 15-minute break with imbalance. Okay, imbalance is support, order block is support, internal liquidity is support. Okay, you have six confirmations, okay, at this specific price range, indicating support for price. The daily is bullish. Again, price action has been ranging, so we're not gonna look anywhere beyond the previous daily highs, right? So that previous daily high is up there. Okay, we're not going to look anywhere beyond that previous daily high. That's all we're aiming for. And even so, within our range as well. So within your range, taking our first entry here at the order block, at the open of the order block, a lot of you may ask, hey Bash, I know that you set your entries at the open of imbalances. Why not this time? That's a great question. The only reason that I'm not setting my entry at the opening of the insufficiency is because the only time that I'll set my entry at the open of a candle is if it's resting inside an imbalance. Okay, the opening of that candle needs to be unmitigated and resting inside an insufficiency. So that's what we have here. Give me 1 second. Here on the 15-minute, that was my stop loss below the low of the imbalance that swept liquidity. Perfect. Okay, then you have that entry, and of course you have our immediate high, which was this one right here, right? And so with that was the trade that we took this morning. That was a nice 1 to 5, and so that is something that that I really personally like, and I see going way beyond to the highs here. So we'll check back and see how price action is, but this is where my eyes go, and essentially taking out that full high over there. So that's what I see for GU. Of course, it doesn't necessarily have to happen. This was more than enough, right? That 1 to 5 right there is all you need. Okay, now we're gonna move over to NAS, and we're gonna do the exact same thing that we did earlier today. Okay, so we're going to cut back, okay, and we're going to again identify our ranges. Okay, so identify your current range. So here we have, okay, previous daily low there got swept, and then we have previous daily high here. Okay, then of course we have the 4-hour, okay, 4-hour coming out of this again imbalance here below the lows. Looks very familiar, right? Then we'll let price action kind of do its thing, come into, oh, it went by really fast. It's okay, we'll watch it together. Okay, and we have our range set, right? And so coming into today, okay, whenever I have my range set, I'm not shooting for anywhere beyond it. Like on GU, for example, I'm not shooting outside of my current daily range. Why? Because I'm not expecting the days to get smacked around. I'm not expecting price action to sweep liquidity. Okay, so I'm expecting price action to be drawn by liquidity, but I'm not expecting price action to always go back and sweep liquidity, right? And so when we were here by the open, okay, we're here at the open, you guys can see here that previous daily high. Okay, and we're going to actually draw that previous daily high because I want you guys to get used to seeing these things. Okay, after we accumulated yesterday, which by the way, if you haven't visited this video, it is the video before this current one on this playlist. On the current playlist that you're on, the previous video before this one is how we took these entries and longs here. We took them live. Okay, so you can go ahead and revisit that. Okay, and then here on NAS, you guys can see that we came out of a previous area of accumulation. Okay, and we're gonna mark out the open here. Just a second. Okay, and the 930 open is right there. Okay, and so what we were looking at here is, again, your 1 hour range being higher high, higher low, came into that imbalance, and then you have this higher high and higher low. Okay, and so there's your previous high, there's your previous low. So you go here into the 15-minute, and the 15-minute hadn't set that yet. Okay, the 15-minute was just like this, and I'm gonna, for time purposes, gonna cut that back so that way you guys can see it a lot better. Now what I want you guys to focus on is this previous daily high. Why? Because think of this previous daily high as a liquidity filled magnet. Okay, and so what a magnet does, it attracts pride, it attracts, right, that's what it's. I want you guys to image this previous daily high. I want you guys to understand that liquidity to the downside was taken here on NAS, was taken below the lows. And so that accumulation left us nothing but the highs, right? 1 second, let me erase this from all the other time frames. Okay, what that left us is just the highs, right? Price action is attracted to liquidity. So within our trading range, from this high to this low here, we were looking at price action, and liquidity was only taken from the downside, and there's only one side to the upside that we left liquidity, and it's that high. And so until liquidity has been taken from the upside, we're not going to be seeing any downside. Okay, so that is my thought process. Okay, so now measuring out your range, okay, on the 15-minute, measuring out your range right before the move happens. Okay, you're looking at 930 being the next candle. So you're looking at your entire range. Now again, your range on 1 hour is from this low to this high. Okay, what's 50% and below? Internal liquidity. Okay, now on the 5-minute, we drop down. What do we have here? We have a sweep of the Asian liquidity, sweep of London, or sweep of this low. Doesn't even have to be anything other than New York low. Comes into the imbalance, accumulates after sweeping a previous low, then creates an insufficiency here, you guys can see, and moves to the upside. Now, imbalance, okay? Imbalances were created. We don't necessarily have to play off of them every time, but imbalances were created. Now, if you guys understand my style of trading, I don't take anything that's that's not inside an imbalance or within an imbalance range. Okay, so personally, although I marked this out this morning on our call, I did not participate in this long here. Okay, so what I just did here is I saw this hold down push, which is your 5-minute order block. The open of that order block, as you guys can see here, has already been played, right? That was this okay, and so right before the open, what I look for is liquidity to be taken. Okay, the New York Stock Exchange open tends to have a lot of liquidity sweeps. Okay, and so that's what I'm looking for here. I'm looking for a nice liquidity sweep into my order block. Since we already traded into the open, all I did is mark out the mean threshold, which is the equilibrium 50% of that entire push down or order block, right? There's two areas of an order block that I'll play. I'll play the open or 50% of it. Those are the only two areas that I'll play out for an order block. Okay, so now we'll let price action do its thing. Boom. Okay, first entry if you take things like that. If not, I understand. Again, entries right there. stop loss below the low of the imbalance, okay, something like that, and of course to that immediate high. And within that 1 minute, okay, now you guys can see that we can aim for that new high up there, all right, off that order block. And so I'm looking at this high for potential targets within my overall day. Why? Because I'm not expecting things to always go to the brand new higher high, right? Doesn't always need to happen that way. And so as you guys can see, we get a nice reaction out of that. Take out that first high, okay? So this was our first trade taken today. Okay, take out that initial high. And I know that there's a lot of information that I'm jammed into just this one call, small segment. So if you guys have any questions, please don't hesitate to reach out to me. This is your daily reminder of, one sec, let me go pull this up for you guys. This is your daily reminder that you guys can always reach out to me through the link on the description below. Reach out to me. You guys can press right here on Telegram. It'll take you directly to my DMs. You guys can check out my Instagram. It'll take you directly to my one and only Instagram. And I promise you guys, I will never, ever reach out to you first. So if you do reach out to me, I'll be happy to answer. But with that, guys, the best way to reach me and contact me is always going to be through Telegram. Now, guys, if you want more information, if you want to more details about my private mentorship, please book a free consultation with me. I'm always open for those. It will pull up my schedule, so you guys, and my availability in your time zone. So go ahead and book one of those free consultations with me. If you inquire more information about our private community, okay, where we drop all of our New York sessions, all of our London sessions, all of our markups prior to them happening, share trade ideas, entries, exits, and much more, and of course all of our recordings. Okay, so be sure to reach out if you have any questions. If not, this second tab right here will take you to the Telegram bot that will give you access to all of our exclusive content. All right, so with that, guys, let's go back to this. So first trade taken, okay, first trade taken there. So now we got our first entry there. Okay, now when we create a new high, what I personally like a lot here is this imbalance. Now what's sitting inside that imbalance again? Boom, you guys guessed it, a nice order block. Okay, so now we'll see if we get back down to that order block. This is an area that swept liquidity. I personally like trades like this that could essentially sweep liquidity, are following structure, and have a lot of upside liquidity. Okay, so we'll see what price action does. And one more thing that got added on to this confirmation is, again, there's no liquidity here. Zero liquidity. I don't take trades if there's no liquidity. If I am to leave a limit anywhere, it's right below liquidity. If I am to do anything at all, it's with liquidity. Okay, so now you're looking at this whole range from this low to that high, 50% and below. You guys can see here, we got these nice equal lows. This is why what confirmed this trade is this internal liquidity point. Okay, once we got that triple bottom, I was like, it's game over. You know, this is the type of trades that I wait for and look for, and you guys will see why. I mean, this internal liquidity play was really clean. I wish I had took the screenshot, but I had stuff to do right after, so yeah, we don't get a screenshot this time. So there we go. We're almost at previous daily high. So first entry, of course, is still riding nice and strong, and then you collapse the entirety of that first entry. Okay, the entirety of that first entry just got collapsed. Okay, so then This is why exits are so important. You guys can see price action just collapsed down. Okay, and overall we now have we can target the same level. Okay, we can definitely target the same level. So here we'll extend that a little bit. We'll put that there. That inside that imbalance. Now that we're a lot closer, and you can see that price action. Okay, me personally, okay, this is why this is precision to the max. This is why when I leave limits on buys, okay, on buys, I leave limits a few points above. So I personally got in a little bit above that imbalance, a few points above, to account for spread. Okay, on my broker, it actually did hit the order block as well. So not only was my order filled, but of course targets were also hit all over the place, not just on this one, but all over the place. Okay, and you guys can see some beautiful price action. First entry, second entry, both played out beautiful, all just playing within the same day. I'm not looking way below, I'm not looking way beyond. I'm just looking to cherry pick the trades that I have within my current range, because honestly, I was most of my positions, okay, was taken off right here in this imbalance here, because I'm not expecting every single high to get taken out. So I was actually 80% out by the time we got right here. And so yeah, that's just how I personally manage my trades. And as you guys can see, it's like the reason I trade this way is to be a little bit more cautious when it comes to news. The thing is guys, is like, if you take, it doesn't matter if you catch trades. Anybody can catch trades. It's about not taking the bad shitty trades, okay, so that way you can enjoy your profits. See, most people, what they're doing is they're taking 3, 4, 5 bad trades, then catch a banger of one really good fucking trade that puts him right back at break even, right? And so what I want you guys to understand is that it's not just about that, guys. I want you guys to take some really high quality setups, right? I want you guys to be able to feel confident holding to the highs, feel confident holding for your targets, because at the end of the day, and I want you guys to write this down, if you do not learn to hang on to your winners, you will not be able to afford your losers. Okay, so with that, guys, if you guys have any questions, comments, observations, please do not hesitate to reach out. I love hearing from you guys. Drop it down below. Any comments, questions, or observations. Okay, like, comment, share this video with whomever may benefit from it, guys. And I will catch you guys on the next one. All right, peace.